This is Justin Pulitzer. This is my midweek video for Thursday, January 30th, 2025. The reason it's later this week is because we had a Fed day today. We're not out of the woods yet either. We have Thursday GDP and Friday is PCE. So we're going to get a look at growth and inflation. As far as the Fed goes, I'm going to just break it down super simple. It was status quo. They had removed some language that got the media all excited about moving closer to their 2% target, but Powell confirmed that in the meeting. I was not so concerned about it when the release first came out because I think the Fed is trying to move away from that, and I think they want some fungibility and maybe some less accountability. I do think they are a little bit worried about the unemployment situation because of the cutoff in immigration. And of course, the potential for wage increases, if that's the case. On top of that, there could be mass government layoffs, which would impact job numbers as well. I think they're also a little bit worried about the inflation situation with regard to tariffs, although in Trump's first term, there was no real inflation, nothing significant anyway. So that's my take on the Fed. I think it was just a status quo punt meeting. They want to see more data. They view their dual mandate as being more in balance now. The one thing that did stick out to me was the growth in equipment sales. They were saying slowing equipment, and that has been a trend for a while, except for the last meeting where they said there was a pickup, but I guess that was just some backward demand that was getting filled. So yeah, I mean, they still think the economy is solid. They still think they're within their dual mandate, and I guess they're going to be data dependent. As far as sentiment goes, we have been coming back a bit. We had been up to 62, which is never sustainable. We came down to 47, and then we came into today at 51. Granted, slow and low reply rates. The Twitter algo is just hating on me. So if you can, please like and share videos, retweeting them or re-Xing them or whatever the hell they're calling it these days. Please help me out. Help me help you get better data. It definitely makes things a little bit more accurate. Okay, moving on. The CNN gauge is 46%. A week ago was 46, so not a lot of movement there. I mean, it just seems kind of stuck. A month ago it was 27, so I guess that's that. I think the reason we've seen more fluctuation is I guess, as being more momentum traders, it tends to be more heavily concentrated into the momentum names and it's more diversified. And we've seen other things benefiting as some of the big cap tech names have come in. So my guess is that's the reason we've seen the situation unfold the way it has in recent readings. I think the Fed probability for again, I just looked at this. All right, so there apparently, I don't know why it freezes when I come to the page and it won't refresh. Oh, so annoying. Basically, though, it's coming down to this, that they're going to likely not cut rates until the summer, June, July, and then I was seeing that it could be somewhere between September and maybe even later for the second cut, if there is going to be a second cut. And I have to tell you, given the fungibility in the dot plots, it would not surprise me if this could take place and then change their mind. I mean, you know, we could be in a situation like we had at the end of the year where the market got a little overexcited about rate cuts, and now maybe the Fed is coming back into more alignment, and they may either not cut rates more, maybe one and done, or they may ramp it up. Powell was basically saying today the only way they're going to change their, I guess, amount of cuts would be for a black swan event. So he's always leaving that on the table because, of course. As far as the VIX goes, we are still pulling back. We're one time framing. We have had a couple of rides to the upside, but really nothing that's made it over the wall, baseball terminology. So This was the best that the Bears could do today, 1808. They couldn't even get it over and staying over the prior day's high. So we're technically still one time framing to the downside. I have an alert over the 1809 high here. And if that can clear, it's 1808, but I have the alert at 1809. I think we could get up to the 1936 and maybe rally still more. If we can't hold here and we have the stacking of MAs here, maybe we do bleed back into the 14s and 15s and the market does make a run back at the old highs. I still think we're in a responsive tape and breakouts are to be looked at with suspicion until they prove not to be. And I have told you my thesis for this year is that we are going to have very wide ranges and the market is going to look like it's breaking out at the highs and it's going to look like it's breaking down at the lows. And it's all going to wind up just being a big mind, you know what, as the market trades in and out. Like we'll see these sort of false breakouts like we saw here in the TNX, only to fall back into range. So what now with TNX? This is, of course, very key because these are 10-year yields. I'd start getting more concerned back up over both the 10 MA, 45.94, and really the 20 MA at 46.29. If that could clear, we're probably going to make it into the 47s. Excuse me. If we can continue dumping, the channel low is a little bit below here at 44.43, but we know we have 50 MA support. We have traded below it, but for a blink. Often when we trade below it and then back above it, you're going to see this has been a theme. This is really the theme for since the year started and really even into the, I guess, the last quarter of last year. We were using this analysis quite a bit in stocks like NVDA, and we'll go through the rest. But back through the 50 MA, below it and then above it to me would be a trigger or a gap and go situation like over the 10 and 20 MAs, which the market would not take too kindly to in my humblest of opinions. TLT, I think, is okay as long as we're still above the 10 and 20 MA, 87 to 87.5. If that can maintain, I think we probably come up to 89.55, which was the prior breakdown, and the 50 MA. And then maybe we even make a run up to the 91.42. I have to tell you, I've been watching the geniuses on TV, the intelligentsia, and all of them seem to think rates are going higher. So naturally, I think rates may be going lower because it seems a little crowded if everybody thinks that. XLF, here we are. Look above and fail with a range high, topping tails. Be on guard for a lower high tomorrow and anything below Fed day lows. By the way, we now have a Fed day range. It's not really that of an impressive one like we had the last time, but we do have one nonetheless. And anything here below 51.62 to 51.74, I think is vulnerable. At least to the 78.6 to 50.64, right? Because we go from fib to fib, MA to MA, so this would be just a check back to basically the 10 MA and the 78.6. If we were to keep going, and let's say the look above and fail fails, how high could we go? Well, if we did it tomorrow, we won't, because there's no earnings or anything here, and financials don't usually trade this way. We'd get 53.97 and maybe even work our way up to the 2.618 here at 54.31. So far, we're chillaxing around the 2 times range. We've been around, like, this looks very similar to here before a rollover, so just be a little careful. Particularly if the 10 MA can't hold on dips, which is currently 50.61 and rising. JPM. Nasty little topping tail today. We are trading above the channel also. I think pullbacks to the 10 MA are okay. 262.20. I can't even believe we're in the 262s in JPM. 2.618 is 281.43 if they want to go full on to the upside. But so far, JP Morgan has acted pretty well post earnings. I mean, it's just kind of gone up. We have seen some of these topping tails, but it has been able to hold. So I'd be a little careful, though, if we do see some rotation. We got some interesting numbers out of some of the NASDAQ stocks. The reactions to them are a little bit mixed. They're all pretty much off the highs, and I think ServiceNow is down pretty big, but we'll talk about that a little later. Yeah, so just be on guard for lower highs at anything below Fed day lows, 265.61. You might want to just trim up here. I think that could be prudent. The dollar. Now, the dollar had been a tremendous headwind and now could be a tailwind, but we are bouncing up against some potential danger levels if we clear. I would say anything over this 108.071 could get some legs maybe to the 20 MA, 108.579, and maybe the underside of the old up channel, which would scare a lot of people because you'd be taking it back up into the 109s. I'd feel better below the 50 MA, 107.596 and this 107.587-ish level. If that can fail, I think we come down to 106.517 to 106.126. So that's my thinking there. Moving right along. And the dollar, rates in the dollar and oil have been, we've called that the pain trade over time. And I think that the pain trade has mean reversion from time to time. It's not always, ripping at any given time. It's always not dumping either. And it tends to happen when it's least convenient. It hasn't really been that much of a factor like we had seen in 2022 and even parts of 2023. But it's something to pay attention to. Bitcoin did have the look above and fail, and we did get a decent pullback. This is a pretty big day's range. Now, what's interesting to me about the 121-day range is that we had a look below and fail of it. So technically, prices should, quote unquote, come back up to the 108.960 to 110.150. Okay? So that to me is still in play, but we do technically still have the look above and fail of the range. So we have a look above and fail and a look below and fail. And we know from the look below and fail, the 50 MA is the key. Also, by the way, when we trade through the 50 and back up over it, tends to be a long. I think you could use today's low of day, or I should say yesterday's low of day. I am filming. It's a little later than it should be. It's like 2:37 in the morning. Late night Wednesday, early morning Thursday. So anything below 103.345 could be a good stop, I think. Moving right along. Gold. This has been acting well, to say the least. We did have a bit of a topping tail. We still are in an uptrend. We negated the triple tap head and shoulders, and I would say really any pullbacks here really to 251.26 are fine. That's trend and this sort of extreme for the right shoulder from 12.11. If we do keep on just moseying on up here, filling up the rising wedge, the 2.618 is up at 258.95. I mean, if we took it to the apex, you'd be looking at 260.84. So gold does tend to have blow-off moves, and it doesn't really feel like we've seen that yet, but it doesn't mean it has to happen now. But gold to me still looks all right. Newmont Mining. All right. So I had bought this on the big dump. I bought it pretty well, actually. It did have a little bit more down, and we did futz around, but ultimately we are rallying. I think as long as it's above the 50 and 20 MAs, it's fine. 20 MA is 40.07, 50 MA is 40.51. It just looks to me like we're having a bit of an accumulation situation. I think we probably could get up to 45.26. That's the 38.2 of the range. I'll be a little leery if it rallies too much into earnings because we saw what happened the last time on earnings, although this had some special charges. This is why, by the way, I prefer to buy gold outright as opposed to these companies. They have operational risk, and we don't like operational risk. We like commodity risk. But Newmont Mining is sort of the gold standard for mining companies, and yeah, why not? So at least I took the long. I just figured over time I'd make some money in it, and so far it's worked out. Hasn't been a huge gainer, but it's not a loser either. Oil, we got the 61.8 and above, and we're pulling back because Trump is deregulating. He is opening up more drilling and permitting more. So this is more exploration. I think the Keystone XL pipeline is going to happen. I think drilling in Anwar is likely to happen. I think that oil ultimately may go significantly lower, but shorter term, we are likely coming into some trend support. And you also have the 50 and 100 MA right below between 71.66 down to 71.10. I think the short here is probably a good zone to cover into here. If you're already short, you could use 73.07 as a stop. That makes some sense to me. XLE, we were bullish for the start of the year, and it just gets allocation money. We got to the underside of the old rising wedge, and here we are pulling back. Is the pullback enough for me at the moment? The answer to me for that is no. I would like it down in the 87s and maybe even 85s. We'll see. Or back over the 200 MA, because back over the 200 MA is a long. We've seen that now multiple times. And by the way, when 200 MAs fail, we go lower. Here we went above, here we're now below. So back up over 90.79 could interest me for a right or right out type of a trade. Okay. Moving right along, I'm going to pull up SPY, which has a little bit of a weird dynamic in terms of the OPEX. I was looking at the, well, we'll get to that in a minute, but I was looking at the Max Payne pins. And for SPY, for some reason, it's 595. And if it's bookended by 603 and 604. So I just think it's a little bit of a unique embedding for SPY, probably a larger hedge. But we'll get to that in a little bit. All right, so as far as the ES and the NQ go, we had a pretty big round trip the last couple of days. This was, of course, fueled on the NVIDIA dump on the DeepSeek. By the way, liquidation breaks in bull markets tend to strengthen them because they take out sellers. They run stops on the weak hands, the people who bought poorly. But we always have to be on guard because liquidation breaks can sometimes become more. In this instance, these just looked very sharp and unsustainable, and naturally there would be a bounce, particularly since we're coming from almost all-time highs. So what now? All right, so here's the what now. I think as long as we are above, I'm a little hesitant to not just say Fed day range because I am very comfortable saying that, but I'll keep it a little bit tighter, okay? Because I don't like to give up a lot of pointage. I think as long as we're above the 200 MA 30-minute, wherever that is at the time, it's currently 60.83, let's say 60.83, because it'll be below the quarter. It's fine. As long as we're above the VWAP, 60.81.14, it's fine. But the problem for me, and I'm going to be a tough grader, is I look at the fibs. And I really do need to see us over 6,100. That's when things got ugly, and that's where I think things could get pretty again. So the bulls need to clear there. If they do that tomorrow and we do keep rallying by the end of the day or by the open, I don't know that we'll do that. We'd be somewhere in the 6130s, 6136 half-ish. Anything below 6,100, though, I am a little skeptical, even though it would technically be above the RTH Fed day high. So 6,100. We did hold where we needed to today. There is no real excess low here, but we did hold the 60, 50, 75 down to 60, 37, 50, which to me was fine. And we need to re-challenge 6,100. The Qs are a little bit larger of a pullback. This was almost 100% retracement, which is pretty fugly. All right, so I'm looking at the situation here, and it's similar. But for me, this is the 50% fib down needs to hold at 21,572. As long as we hold there and above the downtrend here, I think we get up to 21,779 quarter, which is the 61.8. I would just sell 79 because the quarter might not happen because we're only at 21, not 25. I'd be a trimmer there. If that can clear and we can sustain, we likely continue on up to 22.74. Okay. Now, what would get me bearish? Well, a few things. One would be if we got back below the 50% fib, and we, for sure, if we took out the low of day of 21.367. And the same thing, by the way, for the Qs. I mean, the ES. If we took a below 60.42 quarter, I think we're going back to the 59.93s to maybe even a lot lower, 59.50, possible retest. 50, yeah, the Fed day range is very key. All right, let's keep it simple with SPY. The expected move is $6.80. Told you the Max Payne pin is $5.95. but it's bookended by 603 and 604, so maybe we just chillax around the 600-ish level. I have an alert over the high of day because that's the only way I'd be interested in a new money long here. Or lower. Okay, so we're right on the 78.6. We are a little obviously above there in the overnight. We're actually teetering on the breakout here. Now, if we do clear this, where do I think we're going? Well, I think we'd go to 606.41, which was the 12.18 Fed day high. And I think we'd fill the gap to 607.97. Okay, and then we'd see. Because the 609, this is the reference highs. We'd be coming from a higher low, so it is possible for a breakout, but I will assume the range high is the range high until it is not. Now, if RTH, we lose 601.85, you probably don't want to be long. You may even want to try short, right or right out, with a stop above the high at 604.13. And if we lose 599.22, I do think we come down to those 596s, 595s, and then we would see. Back below the 50 MA to me would be a short at this point, because it shouldn't go there, because we held it, and back below would be no bueno. It's currently 596.80 and rising. Moving right along. The DIA. This had started out the pain at the end of last year, and it has recovered quite spectacularly because we've seen some money come out of things like NVDA, big cap tech, little rotation beginning of the year. By the way, this pays a monthly dividend. I think it's okay as long as it holds 444 or 48, which is the 78.6. I think you could use the Fed day low, though, at 445.77 as a stop also. And my guess is we're probably going to try to break out over the high. Everyone's going to get excited, and then it's going to be a fallback into range and then probably pull back. That has been the story of the market, right? We have these false breakouts, so we probably will push up and it'll look great, and then maybe we come back below. And if we do that, trade above 450, 155, and then back below, I think it's a short. So we'll see. Expected move, $4.53. Max pain pin is 4. This can't be right. 438. So I guess they are thinking maybe we get a pullback to the 61.8, maybe on some hot PCE data or a crappy employment number. It's basically back to the 12.18 Fed day high, which I actually think would be reasonable now that I'm looking at it. I saw it. I just thought it was like a little too far away, but given the expected move. But now that I see it, yeah, I think that could be if we do get some kind of bad numbers. IWM, the expected move is $3.42. Max pain pin is 225. We had talked about this likely running into some resistance around 230, and it did. 50 MA is what needs to clear, 229.40. So I don't want to hear anything about longs in IWM until we at least clear the 50-day MA and the 50% fib at 229.48. If we lose the 20 MA at 223.98, it is dump time, likely for a retest of the 200 MA at 216.08, which we did test. By the way, the IWM is the only major indice that did test the 200 MA so far this year, at least. The last time we were at the 200 MA in the Qs was 8.5, by the way. So what's up with the Qs? We're getting some kind of mixed results after hours with tech, although IBM, I mean, they're all up pretty big, except for ServiceNow, but they're off the highs. We'll have to see if that bleeds out to tomorrow or if they can build on the gains. I do think that this could fill the gap to the 229s, and then we'd see, but I'm thinking this 224 area, at least the start of the gap, could be some resistance. I'd get bearish back below 519.42 and double time bullish below 516.90. Okay, so that to me is the key. Expected move, $8.83. Max pain pin is 520, and it is bookended by 521 and 523, so I do think that is accurate. SMH, still looking like poop. It's below the 200 MA, and we have seen moves below and above are bullish. So very simple. Bulls will need to clear the 200 MA at 243.66. Could they do that tomorrow? Yeah, sure. Why not? But they have to do it. And if they do it, where do I think we'll go? Drum roll, please. I think we'd probably come up to the 20 MA at the least at 251.14 and maybe even the 10 MA at 253.55. And I didn't want to do this right away, but I will show you if we're on this time frame, the fib retracement is right at the 20 MA. That was sort of like my no-look pass from from Pippen to Jordan. Yeah. I didn't know that was going to be the case, by the way, but when I look at these things, I could almost see it without sight beyond sight, right? Like Thundercats. All right, moving to this is what happens when I do videos late. I get a little goofy, right? All right, so NVIDIA, this was a gap and go down. Their fear of DeepSeek not needing their good chips. I told you I don't necessarily believe that. There's also some potential for them to be using Huawei chips. Okay. So a few things. I don't believe the story about DeepSeek. There's something rotten in the state of Denmark. Not to get too Shakespearean on you, but there's something up with it. It's good though. I have been using it. I have to tell you, it is impressive. I haven't tried the Alibaba one. That is going to be on my Quen or whatever it's called. That is going to be on my weekend to-do list. But it's got to hold the 200 MA. And my big question with NVIDIA now is, we saw these multiple trades below the 100 MA and then back up above it have been the long. My question now is, will we get above the 100 MA and then back below it being the short? That could complicate things. As long as we're below 129.51, it is not so great. And this could be a bear flag, and we could roll over to as much as a hundo. I will benefit nicely if that does happen. I have on, I think, the 112, 100, and I better not just cuff it. Let me take a quick look at pulling up my mobile account. If this thing would ever frickin' load. You know, they do all these changes, and they're not for the better always. Yeah, I'm long in March, the 112, 100. So, yeah, the put ratio, 1/2. So, ideally, we'll get the pullback, I cover it, and then we get the bounce, and then I close the overwrite. Got to have the huevos rancheros for those types of trades. We've done them with pretty pinpoint precision on a lot of these stocks over the years. We've gotten caught a couple times, but have worked our way out of it pretty well, actually. Gets to be a little bit of kung fu, but hey, why not? Taiwan Semi. We came below the channel. This also, by the way, looks like a trade below the 100 MA and back up above it. So guess what? The 50 MA is now my must hold at 241. If you want to use 200, that's fine. My guess is 212s will be some resistance, because that's where we kind of broke down from. Micron, this was also oh God, I really am not, I sort of am having I traded this poorly and then very well. So what did I do? I had done some kind of call spread and a bull put spread. And what I did was I got nailed on the calls, but on the pullback here to the reference lows, I closed the short. So I booked the down move. And then I know this is, I feel like I kind of, I don't want to say lucked out with this because I knew what I was doing, but I got out well here. I closed it at the 200 MA, so I closed the short side of the bull put spread, and then I closed the bull side up here. And look where it is now, back down. So I traded this very well. And why did I do this? Because look at this lateral range we've been in for a while. I knew there weren't earnings right away. So why not? We had got some good news here. I was actually not so thrilled with this big pullback, but I was okay because we held the 10 MA and we didn't spend much time below 95, which would have not been good. And then we came up higher because this was on some news too. So it looked into range and failed, and now we're up. And the inverted head and shoulders to me looks very suspicious because we are well into the head at this point. So I would say that this is kind of off the table at this point. And I'm more on the camp of the lateral range, and we're going to continue trading in this range until we don't. So Micron traded poorly, then well, and now I'm not involved. And I probably won't be for a while. When stocks are when I have to work hard like that or with the IWM, I just do less of what's hard and do more of what's easy. Yeah, it's not an ego thing. It's just a matter of luck. If you get into a bad situation with a stock, I don't do it. If I get lucky and I get out of it well, after, any problems, then maybe. But if it's something I have to work hard out of, and trade my way out of, I'll stay out of it for a while. And many of you know me with Chipotle on earnings. I do not trade that stock on earnings. I got burnt really badly once on it, and I don't screw around with that. So anyway, Avago, Broadcom. Look, I warned up here the channel high. I said it was looking bull flaggish, but I'd be booking up here. It just was not firing right, and here we are, pulled back to the 50 MA, the 50% fib. I'd be interested if we got down to the 186s, because this was the check back to the breakout, and maybe even an overshoot to the channel low, depending on when it got there. But yeah, we're within the yellow channel now. We stalled at the green. We're kind of mid-channel. I don't really see much of an edge here. Unless we get over the 218.43, I think that would pop us to the 20 MA at 228.88. Or if we lost the 3-day low here below 196.23, then I do think we'd get the 186s and maybe even the full articulation down to the 174s. And it would be great if the 200 MA lined up, because that has held down on pretty much multiple tests. So that would interest me. Moving right along, Netflix is actually the best looking of all these charts. They have gapped up, they sold it off, but it has been bull flagging. As long as we're over 968.01 and as long as we're above 950.76, it is fine. And now the more days that build up in here, if we do break over the 99 level, I do think we could get up to 1,006 and maybe even 1,049s. But it is holding the earnings gap for now. If we start losing this after multiple days of consolidation, it'll probably roll over and start filling in the gap. But if it holds up here and clears the 999, we could really start ramping. IBM, not exactly a name that usually reacts super well on earnings, but it did this time. We are trading a lot higher. The after hours high was 258.70, almost the channel high here. We are trading 246s at the moment. That's not such a great pullback. What would interest me? As long as it stays over, I guess, the 240 level, I think it's all right. If not, we could, believe it or not, fill in the gap and get down to the channel low. To really run, I mean, you'd have to get over the 258.70, and then where are you running to? Right into the channel high. So it seems to me like we rallied off channel low to basically the channel high, and they're selling it off. So that's my thinking there. IBM looks like it could be fully priced, at least for a bit, and probably needs some consolidation. Microsoft, this did not do so well after hours. We were close to the... I think this actually did get the channel high. I saw some notifications in the after hours. I guess it was just to the downside, because I got a bunch. I didn't really look at them. I was busy at the time with some other stuff. All right, moving along. So this came down. We're teetering around the 200 MA-ish area, 100 MA. This 426.97 to 430.82 has to clear again. If not, we do risk coming lower to the 415s. This also looks to me like more of a lateral range, even though we made some incrementally higher highs. Here now we have a lower high. So my big question is, are we going to form some kind of a pennant here? That's what I think will happen. And Microsoft, I told you, does sort of look like it could be forming somewhat of a complex top, but I don't know that that's going to trigger anytime soon. Meta is pretty boss here, I've got to say. We're up against channel high with a dubstep situation. And this one, by the way, when we trade below the 50 MA and back over, it is bullish. After hours high was 716.17. We are trading at 695. So decent pullback on that. I think the top side of the channel, if we get a pullback early, could maybe be a buy the dip if we get that low. But the bulls will need to clear 7, 16, 17, these after hours highs. If not, pops could still get some lock in. Could we get up into the higher 700s, the 776s to 782s? It's possible. But it looks to me like we got in between two times ranges and they split the difference. So meta is bullish, but I'd be a little careful. And it's now going to be an off election year. So I wonder how the numbers will be going forward now that we just saw the election year numbers. Google. So Google usually rides with meta. Whichever one reports first, they tend to go both the same way. And then the next one goes the other way. So by this logic, Google will probably be down on their numbers. And it's interesting that they're not even at the 200 in the after hours here. So I'd be a little careful with Google up here at channel high. I don't know that it's going to... I'd actually love Google to continue running into the earnings, and then it could set up maybe as a pullback situation on 2-4. Tesla, they got a pop, but by the way, Elon Musk, huge win off the Trump victory. I mean, the guy just is on fire, right? We got 413s in the after hours and only up to the 404s, so it's not really that big of a move. I've told you below 430 really doesn't interest me that much. Maybe we get a squeeze up there, 426s to 430s, but we'll need to clear. Just looks like consolidation to me. Moving right along. So ServiceNow, this down nasty in the after hours. Was it down? I think ServiceNow was down. Did they rally it? I'm seeing it like, it's down. It's down. I thought it was down more actually. 2 days. Yeah, it was down more. All right. So, and you know what? Just look at the chart, JP. You'd have seen it because you drew it in. You know why I didn't see it? Because it was lined up with this the neckline. So we had a secure high, and we have a potential head and shoulders forming. So this 1001 to 999 level needs to hold. If not, I would say that this risks a move probably to the yellow channel low where we are, and then maybe even to the top side of the old green channel at 948s, and then we'd see. There are some gap fills. I don't know if we're going to complete the head and shoulders coming, because you'd have to first build out the right shoulder, right? I mean, you don't usually just dump off of the head and shoulders without at least building out somewhat of an incremental right shoulder. And I don't even know if this is going to trigger. But if we do trigger on the downside, I'm going to draw that in right now quickly. We could see, let me just draw this in. Now, if this does trigger, we could see 800, and I don't know if we're going to see 677, but 800 wouldn't surprise me, to be honest. If we build out a right shoulder that's lower and then it triggers. So this probably will hold at least initially, but we'll have to see how big the bounce is post earnings. Apple. So they're going to report after hours on Thursday, and I'm wondering if we're going to see some 61.8 symmetry. What am I talking about? Look where the pullback held at the 61.8 and the 219s. And we're rallying. We got to the 50% fib. I actually booked some today at the close at 239.74. And the next logical upside would be we got the 61.8 on the pullback. We should get the 61.8 on the bounce to 244.54. So that to me could be some resistance. The Apple pullback, I don't want to say I was surprised because Apple does this sometimes, but like the DIA, it was overdone and it bounced. If they keep rallying it into earnings, that gets a little iffy. I do like, by the way, the price action today, that it pretty much opened up near the lows and rallied all day even after the Oppenheimer downgrade, because it's just been downgraded so many times. I mean, the expectations are so low, and now we got below channel and back into it. Look at the last time that happened. So I would actually love to see it pull back on earnings for a higher low, maybe if we rally a little bit more. But we did get a little bit of a shake and bake, but we have baked back quite a bit. A little bit of like an easy bake oven situation. This is what I mean about it getting, when it's late, I get like goofy. All right, so Amazon, we got the 2 times range up here. Yeah, I'd probably be booking and using the 236.15-ish. Low as a stop. I don't really get bearish unless we lose 233 though. That to me would be a little too much on the upside. 266.17 would be the next fib, but we are above both channels here. It's a little rich. And they do have earnings coming up on the 6th, so careful if they rally too much into it. But if there is a pullback, maybe there's a rally to a lower high. Booking. This thing was just unbelievable, rallying from the channel low and then busting out of the channel and then continuing. Seems like we're giving some back here, so where could we I mean, we're not even back to the halfback. I think the top side of the old channel and the gap fill at 44.63.93 could be a buy the dip. What would get me interested on a chase to the upside? A gap and go over the 20 MA. That holds 48.12.05 and 48.56.60, which was the old high post earnings, or the earnings day high, I should say, the 10/31 Halloween high. So if we can clear there, yeah, to me, this just looks like a little bit of pullback. And so far, it's been very controlled. Regeneron. This was a big time stock for a long time. And wow, this is how the mighty have fallen. I mean, we're all the way back down to anchor VWAP. So they have earnings coming up. Would I buy some here? Oof, that's a toughie. You might even want to just wait till post earnings, but I can't say I hate it as much down here now that it's been basically cut in half. So yeah, I mean, you could probably nibble. The old breakout was 605, so maybe there's like a final washout. But I will show you the last time we did get the anchor VWAP, it was a buy. We did rally, but tested it again and almost again. But yeah, I mean, you could do some kind of a call spread down here. I don't hate it. XLC, not one I cover very often, but this looks like a bit of a I don't think I've ever covered this stock, actually. It looks to me like a bit of a channel play. Pretty bullish, though. I mean, it's had some pretty big pullbacks, though, for sure. I would think that if we got up to channel high again at 103.62, it's probably a good spot to trim. You could just keep raising stops, 101. I mean, if you want to use 100 maybe as a stop, I'm all right with that. If you want to give it a little more room. But yeah, I wouldn't, if it were me, I wouldn't let it get below Handy on me. I'd be a buyer down by channel low, if particularly if wherever it is lined up at the near close to the 100 MA, if there was a pullback in the 92s, but that would actually line up with the gap fill here at 93.11. So let me draw that in here. So if there's some confluence at some point, that might be interesting. But it's too close to channel high for me. I'd be more inclined into booking pops here than chasing the long. Have a great rest of your week. I'll see you for the weekend video late night, Friday, early morning, Saturday, assuming there's no outages. Cheers.